Hello and welcome to this Forex Preview at xm.com. We'll be discussing the upcoming Fed meeting and the potential reaction in the dollar. I'm Maria Pachordes, and joining me is Senior Investment Analyst Haralambos Pissouros. So Haralambos, the last time the Fed met, officials raised interest rates by 75 basis points for the third consecutive time. What are we expecting to hear this week on Wednesday from Fed Chair Powell? Is a less aggressive hike on the horizon?
Hello, Maria. Yes, indeed, Fed officials delivered their third consecutive triple hike when they last met, and actually they are expected to go for the fourth on Wednesday. Investors are in full agreement on that. However, they are split on whether the December increment will be of 50 or 75 basis points. The whole aggressive Fed narrative came into question a couple of weeks ago when reports suggested a slowdown in rate increases from December onwards, with the view being echoed by some policymakers thereafter. What added more credence to the newborn dogma was the disappointing PMI and housing data last week, as well as the Bank of Canada's decision to announce a smaller than expected hike and note that it is getting closer to ending this historic tightening crusade. This may have been interpreted as setting the tone for other major central banks as well, and indeed investors were proven right just a day later when the ECB also opened the door to slower rate increases. So, with the details of last week's GDP report for the third quarter also revealing a blurry picture despite the shiny overall growth rate, Powell and his colleagues may confirm the narrative of slower future hikes due to growing economic risks. However, Powell may try to pass the message in a way that it does not give rise to substantial loosening of financial conditions.
Okay, so given all this, what's the outlook for the dollar?
Taking into account that the market still sees rates higher than the Fed does in December next year, such an outcome could result in some dollar selling as there is no more Fed hawkishness to be priced in. That said, if indeed Powell avoids sounding very dovish, a potential retreat in the dollar may not be suggestive of a trend reversal genesis. After all, with other major central banks also hinting at slower rate increases, the Fed could hold on to first place on the Hawks League. Traders may liquidate some more of their long dollar positions on Wednesday, but they may re-enter the game at lower, more attractive levels. Sanguine employment report on Friday could be a justification for doing so, otherwise the correction may extend for a while longer. Now, for the greenback to strengthen instantly at the time of the decision without correcting lower, the Fed may need to appear much more hawkish than expected, showing no signs of remorse. In other words, they may need to signal that they will continue raising interest rates aggressively in order to bring inflation to heel.
Haralambos, thanks so much, and thanks for joining us at xm.com.